by a CEO whose company just completed $1 billion debt offering in order to buy more of it. Michael is the chairman and CEO of MicroStrategy and well known to the holders. Michael, it's good to see you. Before we get started, I was thinking about some of these other people that have, like your company, decided on Bitcoin for how they want to be paid. And I read what Russell Okung, the former Seattle Seahawks player, he took half of his salary, $13 million in December. He took in Bitcoin initially, and at 56,000, the half was worth as much as the whole, and he became about the highest paid NFL player. But listen to what he said, why he did it. When we are all paid in Bitcoin, no one can tell us what to do with the value we create. In a post-fiat world, you won't have to worry about your labor and your time being stolen. And I just love that the NFL player was speaking in those terms. And that's probably similar to your sentiments, I guess, on what Bitcoin represents.
You know, Bitcoin's not for spending. It's not really a currency. So sometimes people get confused, like the Janet Yellen quote. They're thinking they're going to move it around in order to pay for coffee. Now, Bitcoin is for saving. Bitcoin's got a compound annual growth rate nearly 200% for the past decade. And so if you want to save your money for the next decade, it's logical to do one transaction. Put all your money in Bitcoin and wait for a decade and wait for it to go up. And that's what Russell understands. And everyone that's buying Bitcoin right now is doing it for the same exact reason.
Well, Square's fourth quarter results out, a beat on the top and bottom line. We'll get to earnings first. That came in about 8 cents better than expected, 32 cents per share. Revenues also better than expected. And some headlines here on Bitcoin. Square had bought about $50 million worth of Bitcoin. The company doubling down on the total Bitcoin that they hold. The company purchased about $170 million worth of Bitcoin. That now makes up about 5% of Square's total cash or cash equivalent. So the company going further into the Bitcoin market, we're still reading into some of the guidance and other payment volume aspects of this report. But again, beat for Square and the stock pretty much flat right now. It had been down earlier today based on some of those Bitcoin prices.
Just a two-parter on Bitcoin. First off, the revenue there, I think was only up around 7 or 8% quarter over quarter, even though obviously the price of Bitcoin skyrocketed and there's obviously been a lot of retail trading. So I was curious if there were any noteworthy call-outs there. And then just wanted to get your guys' perspective on pros and cons of Bitcoin versus the types of central bank digital currencies that are being discussed more actively by various governments around the world. Thank you.
I can maybe hit the first topic that you hit, Jason, in terms of Bitcoin quarter-over-quarter growth. You know, we've continued to see strong adoption with 3 million customers across Bitcoin throughout the year for Cash App. And in January, saw 1 million new to Bitcoin in the month. So increasing awareness that's building through time. And I think you'll see that reflected in the results as well with Bitcoin gross profit, which is how we sort of anchor to the economic impact to our business. Bitcoin gross profit growing, meaningfully on a year-over-year basis and also on a quarter-over-quarter basis. As we think about, the opportunity as well from a volumes perspective, Bitcoin in the fourth quarter grew 2.5 times on a year-over-year basis in Cash App, and continues to be a strong front door for us as we see product adoption increasing for customers in their first month on Cash App. So we're excited about the opportunity that we see here. But you're right, it's still early days. Only about 1 in 10 customers on Cash App are using the Bitcoin product, and we see an opportunity to grow that over time.
And our thesis around Bitcoin is really quite simple. We believe the internet will have a native currency. The internet has broken through so many barriers all around the world for every industry, and we do think money and currency are a big part of that future. And it doesn't take a lot to imagine that certainly that will exist and that it will be Bitcoin. And the reason why is it is completely open. It is driven by consensus. It is something that anyone can see and no particular third party can actually control. And that really speaks to the principles of the internet. And as more people participate, not only in investments but also through products and through development, it gets even more trusted and more solid and more secure, and something that more people can utilize. And that's our goal, is to help people understand what Bitcoin is, what it can be used for, and make it a whole lot more useful and accessible for anything that they want to do on the internet.
There's 100 million holders now. You figure it won't be long, theoretically, until there's 1 billion holders. And the global nature of who they would be is what hit me, because everybody's going to have a phone eventually. It doesn't matter where you are. You're going to have a phone, probably. You can afford that in every country of the world, most people. So you could have people saving where they had no other way to save. You could have people in countries where the inflation rate is 1,000% on their currencies, and they could be saving on their phone using Bitcoin, and there could be 1 billion hodlers at some point. And I hadn't even considered how powerful that is for people that don't have access to that now.
Look, the story here that's not being told is that Bitcoin is egalitarian progressive technology. We're going to see a day when 7 to 8 billion people have a bar of digital gold on their phone, and they're using it to store their life savings with it. Google took 22 years to become $1 trillion network. Amazon took 24 years. Apple took 42 years. Microsoft took 44 years. Bitcoin became $1 trillion digital monetary network in 12 years. And so the world needs this thing. And I think you can expect that we'll have 1 billion people storing their value, in essence, a savings account on a mobile device within 5 years. And they're going to want to use something like Bitcoin. Bitcoin is the dominant digital monetary network.
Welcome back to Squawk Box. Check out the price of Bitcoin this morning. It is off its high. It's coming back a little bit here. We are now at $49,000 and just $48,000. Let's call it $49,000 for now. Some names with ties to Bitcoin like Tesla, Square, and PayPal will also come off. But take a look at some of the performance of Tesla versus Bitcoin recently. Since February 8th, when Tesla announced it purchased $1.5 billion worth of Bitcoin, shares of the electric car maker are down 20%. Bitcoin is still up about 25%. Yesterday at the New York Times' Dealbook DC conference, I spoke with Treasury Secretary Janet Yellen about Bitcoin, and she warned about what she called potential dangers.
I don't think that Bitcoin, I've said this before, is widely used as a transaction mechanism. To the extent it's used, I fear it's often for illicit finance. It's an extremely inefficient way of conducting transactions, and the amount of energy that's consumed in processing those transactions is staggering. But it is a highly speculative asset, and I think people should beware. It can be extremely volatile, and I do worry about potential losses that investors in it could suffer.
Once again, Bitcoin and other cryptocurrencies getting hit this morning.
Yeah, we saw up 20%, crash across many assets. It's kind of funny how correlated the crypto markets are to Tesla stock these days. But all of the cryptocurrency markets are disconnected. They are not centralized. There's not a monopoly in the way that there is for traditional equities, for example. So you've got to watch kind of many markets all at the same time. There are many different venues trading the same assets. And we saw across the board 20% price depression on many assets, and some assets even further than that on some venues, which may have offered margin trading, for example, which may have caused liquidations.
So, Jesse, do you think the flash, can you characterize it as a flash crash in Ether yesterday? And again, is that tied to Tesla, or is there something else underlying it?
Probably not tied to Tesla, but you never know what moves these markets. They can move, based on news, on whatever the meme of the day is. Really hard to know what's changing. It could be as simple as people deciding they want to pay for take some gains for their taxes with Ether up so high. It recently hit a new all-time high, $2,000 a coin. So could be people wanting to take some money off the table. Really hard to speculate about what's kind of driving the market action.
Was it centered on Kraken?
So we saw huge dips across the whole market. It varied per market. There were some large dips on Kraken, which we think were probably exacerbated by the availability of margin trading on Kraken, the availability of some advanced order types like stop orders, which many other exchanges don't have. So, we're not really sure yet why. We're in the process of investigating this, why the volume was greater on Kraken, or why there was more sell pressure on Kraken relative to its peers. You never really know. It can, as you said, it could be a single whale just decided to dump his life savings, on Kraken. And because the markets are not all connected perfectly, you can have a single market get out of sync with the rest of the markets, which are normally kept in sync relatively well by market makers. But, there's not like a perfect atomic process where we're all sharing orders on the back end. So it does happen from time to time. But yes, we're still investigating.
Jesse, some customers have publicly asked for compensation because their margin positions were forcibly closed. I mean, what are you planning to do about that?
Generally, we don't compensate people for making bad trades. People all the time want to be compensated for making a trade they wish they hadn't made. I wish I made a lot of trades. I sold a lot of Bitcoin early. I wish I had held on to it. That's a bad trade. I wish I wouldn't have made. I wish someone would compensate me for that. But, generally, we don't roll back trades. That's something that is really kind of taboo in the crypto space. Settlement finality is very important, I think, to the credibility of an exchange. So we would not roll back trades except in a most extreme circumstance where maybe there actually was a trading engine malfunction. In this case, there doesn't seem to be any evidence of any trading engine malfunction. It seems like trades processed accurately, and that a lot of sell pressure just drove the price down, and people who were long got squeezed. And from our perspective, that is perfectly predictable. It was within normal market operations. Whether we want to help those people out, come out of pocket to help them because they didn't understand what they were doing. I think that's another question, and we may end up doing something for these people. Again, we're looking into it, but generally we don't cover losses for bad trades.
We look at crypto as a pointer to excess money. We had so much excess money. In fact, if you looked at the growth of M2 money supply in 2020 as a result of the massive stimulus that has already been given, never mind the stimulus we're talking about, and yet that didn't make its way into inflation. CPI actually fell over that same period. All of that excess money, instead of going into wages and goods and services pricing, actually ended up going into the stock market. We saw an expansion of the stock market, but it went into other assets as well. And Bitcoin is a perfect symptom of this excess money. If you just look at cryptocurrency and its meteoric rise, look at special purpose acquisition companies, SPACs, you look at the double B tranche of the CLO market. I mean, we're talking about the riskiest sectors of the market basically attracted excess capital. And Bitcoin, because its rise was meteoric, it is also super sensitive to any concern that we may see a contraction in that excess money.
Bitcoin had an $8,000 round trip, Gina, yesterday from the highs to the lows and back up near the highs. I mean, simply, I don't know if it's incredible or insane, but it's nothing I have seen in 25 years of doing this. NASDAQ, technology, the rotation out of growth names. We're starting to see that. Value stocks are only about a quarter of the economy, growth the other 3 quarters here. Where are you seeing value right now?
So it's a real challenge because we saw actually the growth actually reasserted itself after about 3 months of a value rally at the end of the year last year. And January seemed to be a return to growth. But right now we're looking at a situation where you have you commented on so many elements of a post-pandemic boom. We see so many pieces of evidence that a post-pandemic boom is on the way, and so you see the yield curve steepening and concerns that suddenly the equity risk premium isn't going to stack up very well. But the reality to that concern is that even though we may see a rise in bond yields, and we already are seeing it, the front of the yield curve, because of the way that the Fed actually designed their framework, is going to stay low for at least 12 months, because in order to move short-term interest rates, you have to see 12 months of inflation.
2020 was a tough year for many. Our focus was to help our customers through it all, which required us to adapt and evolve quickly. I believe this is an important attribute for any organization, and I'm proud we continued to demonstrate it. We also took the opportunity to act more broadly by announcing our plans for our operations to be carbon net zero by 2030, and launched our Bitcoin Clean Energy Investment Initiative, a $10 million commitment to support companies that will help drive adoption and efficiency of renewables within the Bitcoin ecosystem. We plan to reinvest any gains back into the fund and are exploring opening it up for participation by like-minded companies. We'll share more details on our environmental and social initiatives next month in our 2020 Corporate Social Responsibility Report. In addition, today we announced a $170 million purchase of Bitcoin on top of the $50 million we bought in the fourth quarter. Why are we doing this? We believe the internet needs a native currency, and we believe Bitcoin is it. We believe it has the highest probability of empowering more people into the economy in a fair way. We're doing a lot to ensure this from a product, open source development, and open patent perspective, and by us owning Bitcoin, our incentives are aligned with skin in the game. And now for some updates on our business. Cash App continued to see strong adoption, both from new and existing customers. In December, Cash App had more than 36 million monthly active customers, up 50% compared to last year. We saw customers increase their usage of products beyond peer-to-peer transactions, including use of our Visa Cash Card, Cash Boost, and Bitcoin. Boost is our instant rewards program within our Cash Card that enables customers to receive unique discounts based on their location and other attributes. In the fourth quarter, active Boost customers spent double that of other Visa Cash Card customers. We also recently launched a special Boost, which a customer unlocks after receiving their first paycheck in a Cash App, and a Bitcoin Boost, giving people a way to earn Bitcoin on all Cash Card purchases. As more of the world has continued its focus to make Bitcoin more accessible and more useful. One example of this is enabling people to change the default denomination unit from BTC to Satoshis, which is 1/100 millionth of a Bitcoin, also known as sats, to help people realize you don't have to own a full Bitcoin and can stack sats instead. In the fourth quarter, Bitcoin volumes per customer increased more than 2.5 times compared to the same period last year, mostly driven by buying activity of both existing and new customers. In 2020, more than 3 million customers bought or sold Bitcoin on Cash App, and in January 2021 alone, more than 1 million customers bought Bitcoin for the first time. Our seller ecosystem continued to grow upmarket and attract larger sellers, as we saw mid-market sellers use 2.5 of our products on average in 2020. Nearly all mid-market sellers use our team management product to schedule staff and view real-time performance and sales analytics for their workforces. And in 2020, approximately half of our mid-market GPV came from sellers with integrations into our developer platform, which enables a data-driven way to process payments using custom software, build unique commerce experiences, and connect with existing business systems. Our sales team has played an important role in our growth upmarket. In the fourth quarter, 40% of mid-market seller GPV came from sellers who had been engaged by our sales team. The team also focuses on educating existing sellers about our broader ecosystem. We use machine learning to identify sellers most likely to adopt more products and which of our solutions are likely to be most relevant. This helped drive a 15% increase in product adoption among existing mid-market sellers in 2020. We plan to continue this work and intend to double our sales team in 2021. So what's our focus for the year ahead? For Cash App, we're going to focus on increasing the transaction limits across the ecosystem, expand our deposit capabilities, and increase the quality of our customer service, all in order to strengthen our foundation and reach new customers. We're also going to double down on our commitment to Bitcoin and continue to look for new ways to connect our product lines within the Cash App. For the seller business, we will continue to focus on growing our omni-channel capabilities, expand globally, and increase our financial service offerings to sellers of all sizes. And with that, over to Amrita.